Good morning, everybody. What a wonderful Friday. Happy Friday to you and yours. What an interesting market. It's been a roller coaster this whole week. And there were good opportunities, actually. And I personally did capture some of them. I hope that you have been doing the same. So look at what happened yesterday. Like, this is insane. Here we have the S&P again with a strong recovery, burning all the shorts. In fact, that's really, this is the picture that we've seen. So yesterday was heaven on earth. The grass is greener on any side all the time, basically. And look, the S&P added back over $1 trillion in market cap today. And sure, I did express some concerns in the recent days, but I also said clearly, never fight the tape. Do you know what that means? It means that you don't fight the price action. Yeah? Whatever you think about something needs to be seen and confirmed with the price action. And that's why I'm the data-based guy. Basically, my trading strategies are all based on statistical edges, meaning, and that's also important for you to understand, every trade is a probability only. You can never know for sure what is going to happen. And if you think you do, the market will humble you. And I've seen plenty of traders that came and went away and never came back again because they thought they figured things out. So that's why it's important. Have a plan. It's statistically sound. It works for you. Has a statistical edge again, because it's so important. I repeat it again. And then execute it correctly. Don't get, sucked in by your emotions. And that actually works. So what else do we have here? Like, look, yesterday, the mega caps tech stocks posted the largest gain since February 2nd last year. So definitely a very, very bullish market. And an interesting thing is also that it was very broad. So 6 sectors ended with at least 2% gain yesterday. And that even despite the fact that the Fed said, no, we're not going to have an emergency meeting. But like I said yesterday, right? No Fed rate cut, emergency rate cut, means the carry trade stays in place, which means at least we don't see these forced liquidations for now. So that's why I said, I didn't expect that the Fed was going to do anything for exactly that reason. That calmed the markets down, and that brought actually things back. We saw inflation figures out of China this morning. They were a little bit stronger than expected. And also, there's another article I read that the inflation in the US for July seems to also have been a little bit firmer. It's still supportive of a rate cut in September, and technically that's the baseline. And don't forget, markets are forward-looking. So that means is that rate cut is pretty much priced in. So if it doesn't happen, big things are likely to correct again in the market. But if it happens, I don't think that it adds another, rocket ship to here. If we look at the calendar today, there's not too much going on. Yeah, we have harmonized consumer price index out of Germany, and also here labor figures out of Canada. And other than that, it's really a lighter day. Next week will be more interesting. There will be bigger, important figures here to report again. And it's really important, by the way, that you look on a week-to-week basis, especially when you look at the big major currencies. What is the PPI doing, CPI doing? And because these things actually, also labor, these things create dynamics. Don't forget, currencies typically work. There are two forces pulling. It's like a tug of war of two forces, right? It's not like stocks in the US are denominated only in dollars. So it's only the price of the stock in dollar. But if you have euro dollar, you have two very extremely complex dynamics working against each other. That's why they don't typically go far from each other too much, right? That's why the dollar yen thing was such a big thing, or still is actually. And that's why when you see these weekly important calendar entries, you can spot basically a tendency, a bias of the market going in one or the other direction, depending on where we are also in the ranges per se. So that's why my 7 building blocks, they include that. I look always where is the price position that we're in, right? And that's an important thing to look at as well. What else do we have? Well, yeah, obviously, the crypto bros are all happy. Prepare for the greatest bull run of my fucking life. Yeah, yesterday, great day. Like, I bought Solana on the dip, and that actually was a trade that worked out quite nicely. Even this morning, we see actually some pullback here. So you could speculate that we could see, another attempt to the high here. Those are, like, of course, risky trades. You're more or less buying the top. Nonetheless, like, and also this trade moved a lot. So the way I do it is that certain cryptos, for the lack of a better word, that you want to hold for a long term, when you see like bigger dips, then you could actually buy into these dips with leverage trades with the futures, and then whatever P&L you make with those, you flatten it and you take that P&L and add it to your spot holding. That's how you accumulate your spot over the long term, and you don't over leverage yourself. You don't get, stuck in too crazy stuff. You don't overpay in funding rates and all these things. So I squared out my Solana last night, somewhere around 160. I did the same with Bitcoin at around down here, actually, again. So look, yesterday in the evening, I could have said like, oh no, I missed another leg. But this morning, again, we're back down here. And this is where I closed out yesterday, around the 60,000 mark. Fine, you cannot, that's another thing. Have clear targets. Don't just aim for, you want to catch every move from the very bottom to the very high. You're not going to do this. What you're going to do is you're going to miss, and you're going to get emotional, and you're going to make mistakes, and you're going to over leverage, and you're going to not close when you're supposed to. You're not going to take profits. You're going to run into losses, and. Don't do that. That's literally how retailers trade like a professional, have a plan, and understand how a plan is actually built. That's, by the way, what I teach in my program. I teach people exactly how to build trading strategies that are statistically sound, how I learned it in the institutional professional space, and that is how you go to war prepared, right? And this is how you make money. Another thing we have here, for example, let me see, on my DarwinX account, we recovered here as well. So let's see how we're going to go from here. So far, that has been the first negative month in July in over 1.5 years. So these things happen, We did have a drawdown here before, but that was within a month. So the monthly number still turned out to be positive. And in fact, when you look at it, these drawdown months are actually the ones that then end up being the strongest from a performance perspective. So once you see the rebound, actually, I will keep you posted on that so you can see how this thing is going to continue to develop. Like I said, I'm providing here an over 1.5 years long of track record, consistent results. This is a strategy that I can also, I could do a YouTube video. If you want me to explain this strategy on YouTube, leave a like, a subscribe, a comment, and I'll share it with you. Another thing, we could look at the weekly trend shift. Yesterday I shared also that strategy here, explained to you how I do. So essentially my WTS indicator would show to look for buys during London Open. We're not yet in the time window. Price would need to come down some more. Remember, you want to buy low and sell high, right? That's really important that you generally always keep that in your mind. You never want to just buy tops because you're FOMOing in, ever. There's always a new opportunity, always. Never think that you will miss out on anything, because you will not, okay? In my almost 20 years now, I can tell you there's no shortage of opportunities. There's more opportunities than you could ever think of, but you got to be able to take advantage of them. And when you take them stupidly, then you lose out on opportunities. You FOMO in at the wrong time. You lose your money, and what you lose more, and that's the bigger issue, your chance to win on a better opportunity where you're better prepared. Okay? So again, all these things, I teach them in my program. It's not just, how you build a trading strategy, but also how you build the right mindset around it. I mentor the people in my higher tier program to, as they develop their program, their own strategy. I help them with the process. I review their trades, their back tests. We talk about mindset issues on live calls, challenges in execution of trading. What are you facing? Why are you facing it? How can you solve it? And all these things. And this is how you become a trader, right? So it's a difference. What do you want to be? You want to be a gambler, you want to be a flipper, or you want to be a trader that continues to make money from any market for the rest of your life, right? To me, it's a very simple answer to that, and I think you can guess what it is. Yeah, so that's it for today. Happy Friday, my friends, and I'll see you on the next video. Like, subscribe, and thank you.